I realized at the end, means I forgot to tell you that do it fast. Okay, do it fast at 1.5 or something. Okay, so that wherever you have a problem now, whatever has gone right, there you no need to check full, don't see the full lecture. Wherever you have gone wrong now, see only those part, but I ultimately have solved the full paper. Okay, so I forgot to tell this, now I am telling. Okay, okay, let's start. Okay, this is leverages. We are going to solve the paper. Okay, so I think some questions were easy, some questions were difficult. Okay, before going through this lecture, you should know all the formulas. That is the prerequisite. At the same time, means if you have not revised the chapter and you have means it has been very long since you have revised the chapter, then you should revise the chapter and you should sit so that you should know the formulas and all. Okay, so let's do it quickly. Okay, on the left hand side you can see the paper here. Okay, this was 30 marks paper and some question, 1 or 2 questions was difficult, otherwise the paper was easy. Okay, so sales is 10 lakhs. Okay, sales is 10 lakhs. So MCQs no need to show calculations. Break even sales is 6 lakhs. Okay, fine. Degree of operating leverage. Now using this you should understand that how I will calculate operating leverage. Very simple. I will calculate operating leverage using what? Using formula 1 upon margin of safety. Otherwise there is no way. Correct? Now EBIT is not given, nothing is given. So you should know margin of safety. Margin of safety means what? How much the sales is more than the break-even sales. How much the sales is more than the break-even sales. So what I do is margin of safety first I'll calculate in percentage, that is sales minus break-even sales. Okay, what is the formula? Sales minus break-even sales, correct? Upon what? Upon what? Upon sales. Okay, upon what? Upon sales. Fine, upon sales into 100. So sales minus break-even sales upon sales, that is margin of safety. How much safe you are? Break-even sales means what? No profit, no loss. In costing, marginal costing you might have done, correct? So what I do is sales is how much? 10 lakhs minus break-even sales is 6 lakhs upon 10 lakhs. Remember the base is what? Sales. Okay, into 100. So this comes to 40%. 4 lakhs divided by 10 lakhs is 40%. Once I get this, I can easily calculate DOL. This all can be done on Calc, no need to write also. Okay, is equals to 1 divided by 40%. So you can take 40%. Okay, 1 divided by 40%, I think the answer should be 2.5. Is that clear? Don't forget to press percentage sign. Okay, 2.5. Very easy. Option is C. Okay, this is first question done. Okay, whenever you are solving the paper, at that time you should be, generally you should be following the sequence. If it is not possible for you to follow the sequence, then obviously what you should do is you should leave the space. Okay, whenever we are solving, like let's say I don't recommend jumping the questions, means doing second, third. You should solve, but when the paper is difficult, at that time what you can do is you can not follow the sequence. Don't follow the sequence when the paper is difficult, but means you are not prepared, or at that point means a person who is not prepared only, he doesn't know, means all the questions majority doesn't know, that time you can skip the sequence. But whenever the paper is easy, you are prepared for the exam, you should always follow the sequence, because the paper checker, for him it becomes easy. The less you give stress to the paper checker, the more easy to get the marks. Understood? So going ahead, listen. Second question. Now see, this is also a 5-mark question. Obviously this question papers, what I have said now, it will be difficult. In the initially before the paper itself I said that the paper will be difficult. To all the students I have said this, right? So this is a practice going on. This is not the test. So that in the exam, if we get difficult papers, then what we will do? It is based on that. Okay, we are solving this. Fine, listen. So prepare the income statement. Number of equity shares is 1,70,000. Leverage is 3:1, 4:1. Financial leverage is given. If you remember, whenever financial leverage is given and interest is given, I said you have to be very careful, because easily you can get what? This was the tricky question, right? Easily you can get, means financial leverage interest, means what is the formula for DFL? You know the DFL. EBIT upon EBIT minus interest, that is EBT. Correct? So whenever financial leverage is given and interest is given, you can easily calculate the EBIT. Okay, that is first part. Okay, operating leverage is given, variable cost to sales is given. Okay, income tax is given. Calculate the EPS of the company. You have to make the income statement. Now, see, starting from what is given, question number 2, working note number 1, I can do like this, P and Q. So DFL is equals to EBIT upon EBT. Now this EBT can be written as EBIT upon EBIT minus interest. Understood? So now what I will do, EBIT is how much? Check. EBIT is, financial leverage is 3. So I will write here 3 for the P. Okay. EBIT is how much? I don't know. So I will take it as X upon X minus, in the first case the interest is 5,50,000. So I will write 5,50,000. Correct? And here what I will do is, my DFL is how much? 4 is equals to X divided by X minus how much? 6 lakhs is the interest. Clear? So once I write this, what I can do, I can solve the equation. Correct? So this will come here. So 3 into X minus, the denominator will go to the left hand side. Correct? 5,50,000 is equals to X. 3 is common for both. Okay, it will get multiplied to the both the terms. 3 into X is 3X minus 5,50,000 into 3. How much? 5,50,000 into 3. How much? 16,50,000 is equals to X. Now what you can do, when X will come this side, it will become 2X is equals to 16,50,000. Okay, X is equals to 16,50,000 divided by 2. 8,25,000. So I have got EBIT. Same way here, I am directly writing 4X minus 24 lakhs is equals to X. 3X is equals to 24 lakhs. X is equals to 8 lakhs. Simple. This much calculation you should be able to handle. Understood? Otherwise it will be very difficult for us, okay, to pass the exam. Okay, this much calculation we should be able to do. Okay, going ahead. Once this is done, see, EBIT is ready. Correct? Now I know the operating leverage. Because I know the operating leverage, what is the formula? See, this is how, means once you know one thing now, you should see related to that what is given. Like I know that degree of operating leverage is nothing but contribution upon EBIT. So what is contribution upon EBIT? Means DOL I know, that is 2. So contribution is what? Contribution I don't know, but EBIT I know, that is 8,25,000. So whatever is unknown, now if one thing is missing in the equation, you can easily find the other. I know the DOL. Without formula, you will not be able to solve the chapter. Contribution upon EBIT, I know the EBIT, so I can do easily. So in the question, what happens? What is the problem with the question? Students, you know, they don't understand where to start and how to do the next step. So first step is what? Financial leverage and interest is given. I can easily find EBIT. Related to EBIT, what is given? Number of equity shares is not related. Operating leverage is related. Contribution upon what? EBIT. So contribution upon EBIT, if you do, at that time you will easily get contribution upon EBIT. So contribution, you can calculate the contribution. That is what. Okay. Same way, contribution here, how much you will get? Come on, tell me. Contribution 8,25,000. Okay, 8,25,000 into 2. 16,50,000. Correct. Here DOL is how much? 3 is equals to contribution upon EBIT. I have calculated above 8 lakhs. So contribution will be 24 lakhs. Correct? Done. Understood? Like this means common calculations are going on. So same way you can left and right you can do. Okay. Fine. Once this is done, now see, contribution I got. Related to contribution, what is given? Variable cost to ratio. Correct? Variable cost to ratio. Now when I say variable cost to ratio, variable cost to sales ratio, this is how much? This is 67%. That means profit volume ratio is nothing but 33%. 1 minus variable cost. 67% is variable cost. Means 33% is what? Out of 100. 100 minus 67% is my variable cost. Understood? So you should, means this is the only way to present. There is nothing else. Okay. Here the variable cost is how much? 50%. So remaining my PVR is equals to profit volume ratio is equals to 50%. Once you understand this, listen. Once you understand this, now what is the profit volume ratio? Profit volume ratio is equals to contribution upon sales into 100. So I know the contribution, I know the PV ratio. What I can find? I can find sales. Understood? So this is 33 is equals to contribution is 16,50,000 above I have calculated divided by sales into 100. Okay. Obviously I am solving the paper, so I can't go slow. All these calculations you should be able to understand that what I am doing. Okay. Sales is how much? Sales will be, come on, the 16,50,000 divided by 33 into 100. Sales we will go to the left hand side, right? So sales is how much? Calculator. 50 lakhs, right? Okay, here 50 is equals to contribution was how much? 24 lakhs. So 24 lakhs upon sales into 100. Sales is equals to how much? 48 lakhs. 24 lakhs divided by 50. This will go here. This 50 will come down. Okay, and into 100, right? 48 lakhs. Once all this is done, you can easily make what? Now you can make income statement. Sales minus variable cost, contribution minus fixed cost, EBIT minus interest, EBT minus tax, PAT, or you can also call, because preference is not there, you can call it Hitesh, earning available to equity shareholders divided by number of equity shares. What you get? EPS. Done. Understood? So sales, here it is 50 lakhs, right? Contribution is how much? 16,50,000. So the difference of 50 lakhs and 16,50,000 is what? Variable cost, 33,50,000. Correct? Fixed cost I don't know, but EBIT I know. EBIT was how much? EBIT was 8,25,000. Correct? So 8,25,000. So difference is what? 8,25,000. Same. 16,50,000 minus 8,25,000 is 8,25,000. Interest was how much? 5,50,000. On the left hand side you can check in the paper. Okay. How much you'll get? 2,75,000. Tax rate is how much? 30%. Correct. 30% of 2,75,000. 82,500. How much you get? Minus PAT Hitesh 1,92,500. 1 lakh is number of equity shares. So here you get 1.925. Some people have written 1.925. In the solution they have rounded it off to 1.93. That's fine. Same way you can do here also. 48 lakhs. Okay, if you remember, my contribution was 24 lakhs. Correct? So my variable cost is 24 lakhs, balancing figure. Right? Fixed cost I don't know, but EBIT I knew, that was 16 lakhs. Above I have calculated. See here, 16 lakhs. No, sorry, 8 lakhs. Right now? 8 lakhs. Difference will be 16 lakhs here. Okay. So interest is how much? Interest is 6 lakhs. I'll minus this. What I get? 2 lakhs. Tax is 30%. So 60,000. When I minus this, I get 1,40,000. Number of equity shares is 70,000. I divide 1,40,000 divided by 70 rupees. 2. I think majority of the students have done this. Correct? Therefore, I was a bit fast because this is very easy. Okay. This question was very easy. There's no problem in this. Okay. Fine. You can pause and you can copy. Okay. Coming to question number 3. This was again easy. Everybody, majority of the people have done this. Question number 3. The percentage increase in EBIT is 6%. Net profit increases by 6.9. If the sales increases by 6%, net profit will increase by 24%. DFL, first thing, unnecessary information is given. DFL, the normal formula is EBIT upon EBT. But in percentage, what happens? It's reciprocal. Percentage change in EBT upon percentage change in EBIT. Correct? This is the normal formula. Right? So, percentage change in, here if you can see, if EBIT increase by 6%, that means denominator is 6. Net profit, PAT increases by 6.5. Same will be the increase for PBT. Correct? because tax rate is what? Proportionately changes. Right now, this we have done. Right? Sales increase by 50%. Contribution will also increase by 50% because variable cost changes proportionately. Same way, EBT changes by 10%. Just an example. PAT will also change by 10%. Correct? So EBT is how much? Percentage change 6.9. Correct? Now EBT means PAT, that is 6.9. So 6.9 divided by 6. How much? 1.5. Unnecessary information was given. If the sales increase by 6%, net profit will increase by 24%. All this has no meaning. I have to calculate financial leverage and the answer is 1.15 na? Sorry. Yeah, not 1.5, 1.15. Okay. Option is what? Your D. Okay. This was also means some people who taught on this, there it was a mistake. Otherwise, many people have done this. Okay. This again 2 marks question. Next. See, a company operates at a production level of 1000. Contribution is 60 per unit. Operating leverage is, now you should understand, this is question number 4. So you should understand, if I want to make a income statement, they are asking us what would be the profit after tax. I can start with contribution. Contribution, now this is again MCQs, minus fixed cost, what I'll get? EBIT minus EBT. This you can write in your paper, okay? Sorry, EBIT minus interest. You get EBT minus tax. You get PAT, okay? What they are asking? Earning after tax. So contribution is nothing but 60 multiplied by production unit is 1000. Okay, 60 per unit. For 1000, what is the contribution? Contribution would be 60,000. Is the fixed cost given? No, but I know that operating leverage is given. We should know that operating leverage is equal to contribution upon EBIT. Correct now? But I don't know EBIT. Right? Contribution is there. Tax is there. Tax is 30%. Okay, now here, once you reach here, the student will get stuck. But you should understand that combined leverage is given. So financial leverage now you can find easily. Correct now? You can easily find financial leverage. Okay. Financial leverage is how much? Financial leverage. But I think here you can find contribution now, because contribution, here you can find EBIT. Okay, easily then using DFL I can find EBT. See, my operating leverage is 6, contribution is 60,000. So upon EBIT, so EBIT is how much? 10,000. EBIT is how much? 10,000. Correct? Divided by 6. So once I get this 10,000, okay. Now I can from DCL now I can calculate DFL. DOL into DFL is what? DCL, combined leverage. Right? Easily I can do this. I know DOL, I know DCL. Correct now? Combined leverage is how much? 24. DOL is how much? 6. So into DFL. DFL is how much? 4. DFL is how much? 4. So if my financial leverage is 4, DFL is 4, EBIT upon what? EBT. Now understand, 1 minute. This all things now you should know. Otherwise you will not be able to see the knot, how it is going on. See the thread, how it is going on. I know contribution. So related to contribution, what I have? I have DOL. I know DOL. I know contribution. I can easily calculate what? EBIT. This is intuitions. Once I get EBIT, further I get stuck. So I should know combined leverage is given. I know combined leverage. I know DOL. I can find DFL. Understood? So once I know DFL, you should understand that I can easily find EBIT I know, DFL I know, I can find what? EBT. Understood? Simple. So orally this should happen. Actually, now this is not like you can mug this up questions, mug it up, right? You can mug, you can by heart these questions. You should know how to solve. Now DFL is how much? 4. EBIT is how much? 10,000. So EBT is how much? What's EBT? EBT is equal to 10,000 divided by 4. 2,500. Once I get this 2,500, right? Tax is how much? 30%. So on 2,500, 30%. Or directly you can calculate 70%. No need to calculate 30%. How much? 1750. This is what they have asked. Option is what? B. Okay. I went into details, but you should know that you can calculate it very easily. Right now, in brain itself, in mind itself, you should be able to. DOL is given, contribution upon DOL, I'll get EBIT on Calci 10,000, correct? Once I get that 10,000, right, DFL is how much? 4, right? So 10,000 divided by 4 is 2,500, 70% of that will be PAT. Okay, like this. You have to be quick. Now the level of the questions have gone up in FM. Okay, and MCQs are there, so you will have to be quick. It's a means you should say that you are blessed because these questions are being asked for 2 marks. If it would have means slowly a time will come after 3-4 years that they will ask this for 1 mark. This is what has happened over a period. Initially, what the questions we solved right now, this previous question, these all questions are there to ask for 8 marks. Okay, at least 7-8 marks they used to ask these questions. Now they have started asking for 5 marks, 4 marks. So you have to be quick. Okay, fine. So this is how we have solved. I think till here now there was no problem. What happened? I think this question now this here there was a problem. Majority of the people na Punya Kalash. The question name is also Punya Kalash and it destroyed all Punya of ours. Okay, fine. So I think here many people had a problem in this question. Let's see. Understand. So margin of safety is given. Again, if you know margin of safety, you can calculate DOL. If I know DOL, if I know DFL, I can easily calculate DCL. Just I'm going through this. Okay, I'm not saying that everything will be means everything is required, but still we should know. I know debt, I know tax rate, I know earning yield. Okay, question number 6. Let us start now. Working note number 1. As means whatever I can calculate, I am calculating. Margin of safety is equals to 1 upon DOL. But I don't know. Sorry. DOL is equals to 1 upon margin of safety. So I can calculate 1 divided by 0.4. Answer will be how much? 1 divided by 0.4, 2.5. So I know this. Working note number 2. DCL is equals to DFL multiplied by DOL. So that is 1.5 multiplied by 2.5. Okay, I don't know whether it will be required or not, but still. $3.75 I am getting. 1.5 multiplied by 3.75. I don't know whether it will be useful or not. 1.5 multiplied by 2.5. Answer is wrong. 3.75. Correct. Okay. Okay, fine. Listen, this is done. Next is what? Debt is given. Interest rate post tax is given. So I can calculate interest. Interest is post tax. 1 minute. When I write the interest now in the income statement, it is not post tax. It is pre tax. Many people have gone wrong here. So I'll have to calculate pre tax. So generally how I calculate post tax? Working note number 3. Interest post tax is equals to interest pre tax, small thing, and everyone went wrong, into 1 minus t. Whenever I have to calculate anything post tax, I multiply with what? 1 minus t. Post tax is given, that is 9. So interest pre-tax, this is not bracket, bracket means it is not getting multiplied. Okay, divided by 1 minus t. 1 minus t is how much? 0.25 tax rate, so 0.75. Interest pre-tax is equals to 9 divided by 0.75, how much? 12%. Here many people have gone wrong. Okay, post tax is given, so I don't want post tax, I want pre-tax. Post tax where we calculate in the WACC calculation, KD into 1 minus t. If it is post tax, no need to do anything about the KD in cost of capital. But here what we have to do is we have to calculate pre-tax, because on EBIT whenever you minus that interest, it is pre-tax only, tax benefit you get right now. That is what. Okay, chalo, next is what? Pre-tax is done, this is done. Okay, I got the interest pre-tax, so I can calculate interest in rupees. That also I'll calculate. Interest in rupees is equals to how much is my debt? Debt multiplied by 12%. Now people ask me, sir, if we don't write directly debt into 12%, it's okay, because in the question it is given. This for these all things you should write steps, but that does not mean that they will cut marks for this. Okay, they also understand. Fine. So 18,000 means query is that, do I need to write debt into interest pre-tax on a stepwise? No, that much time we don't have. Is that clear? So interest debt into 12% directly. Okay, fine. So 18,000 is interest. What else I can do? Acha, I know DFL, so I can calculate EBIT, correct na? Working note number 4. I know DFL. So EBIT and interest also I know. DFL I know, interest I know. I can calculate EBIT. EBIT upon EBIT minus interest. Correct? So DFL was how much? Here we got na DFL. 3 point. Hey, DFL I don't know. Yeah, DFL was given in the question. Oh, DFL is given 1.5. Okay. I calculated DCL. Fine. This is EBIT upon EBIT minus interest. EBIT minus interest. Interest is 18,000. Okay. Now this calculation should be easy for you. 1.5 into EBIT. If you are not comfortable to write EBIT, write X. 1.5 into 18,000. How much? 1.5 into 18,000. 27,000. Minus na? Minus 27,000 is equals to EBIT. So directly I will write EBIT is equals to, this will come this side, 1.5 minus 1 will become 0.5, which will go that side and it will get divided. 27,000 divided by 0.5. If you are not comfortable, go stepwise. Understood? If you are not understanding, you have to. This is not expected. Understood? This much time, because questions have become lengthy and the marks are less. So you'll have to skip the step. If you see now, they have not written all these things. What they have done is they have directly written means 54,000 in the solution. Is that clear? So they don't show steps and all. They understand that this much you can manage. This is all you know, how to solve equation and all. Fine, but the answer should be correct. That is a means you should not in the means what I mean to say. You are trying to skip the steps, and if the answers are wrong, then it will be a problem. Understood? We should be correct. You can skip the step. Okay, so answer is EBIT is 54%. Actually, what we want to make income statement. Okay, so market price is given, PV ratio is given. PV ratio I know, contribution I know, so I can calculate sales. I think I know contribution. No. DOL I know. DOL I know EBIT. See, same. This is related to that question only. The previous second question what we did now. I know DFL, I know interest, I can calculate what? EBIT. Once I know EBIT, I know DOL, I can calculate contribution. Simple. So this question was also not anything different. But if you see, interest was post-tax and everyone went wrong there. This is the common sense now. We are doing CA. Means I'm not demotivating or I'm not saying something bad about you. But this is means a person should know. We have done DT, we have done so many things, we should know. A foundation ka bachcha na, if it makes a mistake, then it's fine. But inter student should not make all these mistakes. And this I covered in investment decision also, that post-tax and initial also, whenever I start the chapter in FM, at that time I covered, see this is post-tax, this is the benefit, interest is always pre-tax, preference dividend is not tax deductible. All this we have discussed. Only one note was there where everyone went wrong. That interest was post-tax was given, you have to make it pre-tax. Okay. So once I know this, so then DOL can be calculated. DOL is there, so I can calculate contribution. EBIT. DOL was how much? Operating leverage 2.5 I think. Correct na? 2.5. I have calculated DOL 2.5. I know, I don't know contribution, but I know EBIT. How much? 54,000. Right? Working note number 5. So I can calculate contribution is equals to 54,000 into 2.5. 1,35,000. 1,35,000. Okay. Working note number 6. I know contribution. I know PV ratio. See, this is similar to question number 2, except that interest part. Okay, and what else is different, I'll tell you. Why? Because earnings yield and all is given, na? Wait. So PV ratio is equals to contribution upon sales into 100. Now you should not write this. What you should write is directly, I want sales. So directly you should write sales is equals to contribution upon PV ratio. PV ratio will come this side, sales will go that side. Understood? So this is again the same. What we are doing? What is contribution? Marginal costing. What is contribution? Contribution is nothing but the thing in amount, 1,35,000, and percentage of that contribution to sales is how much? PV ratio is given 30%. Means what I mean to say is, you remember present value of perpetuity, installment divided by interest rate. Installment divide, you know the amount, you know the interest rate, you can calculate 100%. What is 100% here? Sales. You calculate all the things based on sales. Variable cost is based on what? In percentage terms, sales. Contribution is based on what? Sales. At that time, contribution divided by sales into 100 means contribution, when the basis for the contribution percentage is sales, the basis for the contribution percentage is sales, that is known as PV ratio. PV ratio is contribution upon sales into 100. I'll tell you in Hindi once. Contribution upon sales करते हैं ना, तो बेस क्या है? सेल्स है. तो बेस जब सेल्स है बराबर ना, तो पीवी रेशियो मिलता है. कंट्रीब्यूशन क्या है? अमाउंट है. पीवी रेशियो क्या है? कंट्रीब्यूशन का परसेंटेज है. अंडरस्टूड? पीवी रेशियो इज नथिंग बट परसेंटेज ऑफ कंट्रीब्यूशन विथ रिलेशन टू सेल्स. So I know the amount, I know the percentage, what I can calculate? 100%. In the income statement, what is 100%? Sales. Okay. So contribution upon sales into 100, that is PV ratio. Okay. Next. So answer is how much, please? What is the answer? 2 lakh. Rough figure can come. 2 lakh. Not 2 lakh. 4 lakh 50. Okay. 4 lakh 50. 4 lakh 50,000. Correct. 4 lakh 50,000. Understood? Okay. So once this is done, see, I can make the income statement. Sales, you should write here income statement. I don't know anything else is remaining or not. Let's see. We can do it later also. Sales is 4,50,000. Correct. Minus variable cost, I don't know. Contribution, I know. Contribution is how much? 1,35,000. So difference is variable cost. How much? 3,15,000. Okay. Minus fixed cost, I don't know, but I know EBIT. EBIT, what I have calculated above? 54,000. Correct. So my fixed cost is 81,000 difference. Understood? Minus interest, I already calculated. Obviously, it should be pre-tax. Pre-tax interest is 18,000. So when I minus, what I get is EBT, that is 36,000, minus tax. Tax rate is 25%, correct? That is 9,000, right? And then I get PAT. How much? 27,000. 1 minute. Do I know the number of shares? The number of shares. If I want to calculate, find out the number of equity shares. Achha, that also they have said. Number of equity shares. How I will get number of equity shares? Now here I know the earning yield. Okay. I know the MPS. I know the MPS. You should remember that earning yield. If you remember in the ratios also I said, and when we were doing dividend decision also I said, okay, those who have completed with dividend decision, for them I am talking. So earning yield is nothing but whenever in the ratio the formula is means yield, the name is yield, the base will be MPS. So numerator is EPS because it is earning. Understood? So obviously if I know the earning yield, if I know the MPS is given now 125. Okay, so I can calculate EPS. EPS is equals to 125 into earning yield is 12%. So EPS is how much? 15. EPS is how much? 15. If I know the PAT, how I calculate EPS? EPS is equals to PAT upon number of shares. PAT upon number of shares. Correct? Na, equity shares. So if I know the PAT, if I know PAT, if I know the EPS, see here, I know the PAT, I know the PAT, I know the EPS, what I can calculate? Number of shares. What I can calculate? Number of shares is equals to PAT upon EPS. So PAT is 27,000. EPS is how much? 15. So answer 27,000 divided by 15. Okay, how much it is? 1,800 shares. 1,800 shares. Okay. Listen, coming back where we started the question. Okay, because there was an explanation, it took time. Otherwise, maximum 4 to 5 minutes, not more than that. I know that MOS was given, so I can calculate DUL. Because I know DUL means DFL and DUL both, I can calculate DCL. Any which ways, this was not useful, but still I calculated. Okay, as a student I was solving. When I went to the interest, I saw that it is post tax, but what I minus in the income statement is pre-tax. See, all these things now in exam, let's say if we would have not done this paper, then what would have happened? And if the same question or the same this means post tax item is given somewhere in the paper, what will happen? At that time also you will fail. Today we have seen these questions, so if it comes somewhere, and this is very clear now that interest should be pre-tax in the income statement. When we calculate the WACC now, at that time KD is what? Post tax. Correct. So post tax is given, pre-tax into 1 minus T, 9 upon 1 minus 0.5, pre-tax is 12%. So I know the debt, I know pre-tax is 12%, so my interest what I paid is 18,000. Understood? Once I know DFL, once I know interest, I can easily calculate what? EBIT. From this, the question becomes normal, very normal. Once I know EBIT, I know DUL, what I'll calculate? Contribution. Once I know contribution, once I know means the PVR is given, I can calculate what? Sales. Once it is done, I can make what? Income statement. Simple. Understood? In this question, only twist was earning yield was given, and this is not a rocket science. This much to a FM student who has studied, he should know that earning yield is EPS upon MPS. Formulas I am not, see, formulas so you will have to read. Means over a period with practice you should know. That is what I mean to say. I am not saying that you are fool or anything like that. Don't take it in other way around. Understood? We are all learning here. We are student, and because you are student, you have come to me. Correct? But what is expected that the formulas what we have done now, we should know. Means this much so we can expect not C enter. If you know earning yield, if you know the MPS, we can calculate what? EPS. That is what I mean to say. Once I get EPS, I know the PAT. The last question, they are asking the number of equity share. I can easily calculate. PAT upon EPS is what? Number of shares. Done. Paper was not that difficult till here. Believe me. And this twist will be there. Two types of students are there. Okay. Generally this happens with CMA students. CMA students, it majority happens. What happens, if one paper is difficult, now all the advertisement people for CMA, those who classes do for those who run the classes for CMA, they do the advertisement on the first day itself at all the centers. If the first paper is difficult, they don't come for other papers. Why? They lose the confidence. And in the exam, I don't want you to lose the confidence. Therefore, we are doing all the difficult. All the papers will be difficult, whatever we are doing in the class. Understood? And in exam, all these papers will not be difficult. Means those who have taken, my students, those who have taken CA test series now, you might be knowing that the paper what they have is very simple. There you are getting 40 on 40. I know many people. But here in this, they couldn't get. Why? What is my motto? Means again making it very clear that any one of the question now should not demotivate you. Then see, like this time what happened, some people were saying that, sir, FM final question they asked, CA final question, means something was there which was out of the syllabus, so the paper was difficult. No. If that question is for 10 marks now, so everybody is attempting for what? 90 marks paper. You should remember this. If you are prepared, you don't know, that means everyone doesn't know. At least FM I can challenge you. Is that clear? So don't lose the confidence. 7th question. How many questions were there? 8. 7th question I can understand. See, understand in the sense, this was a bit difficult question or different question which we have not done in the class. Fine. So let's do it. See, here financial leverage is given, PV ratio is given. Okay. So financial leverage is given, PV ratio is also given, and tax rate is given, depreciation is given, part of manufacturing overhead, that is 10,000. Preference dividend is 15% of operating profit. Okay, they have given us the preference dividend, but it is based on what? Operating profit. Cash break-even sales is 2,25,000. Okay, and fixed equity share capital is 1 lakh. Reserves and surplus is 35,637. Okay, and then we have to find the sales, means we have to fill in this. Okay, sales minus variable cost, everything, and complete the income statement. Here the operating leverage, combined leverage, percentage change in EPS if the sales increase or decrease by 7%. So first what we'll have to do, we'll have to complete this table, sales minus variable cost, this. Okay, so what we can do is, listen, what we can do is, going slow, what we can do is, let's start with the question. I want to clarify something. Now here na, this preference dividend is based on what? Wait, let me make it bigger. 1 minute. In here what happened, you know, the preference, this financial leverage is given, correct? Generally what happens is financial leverage question, this formula is what, you know, financial leverage formula is EBIT upon EBT, or I can write EBIT minus interest. Okay, now here the preference dividend is given, and that preference dividend is 15% of what? Operating profit. What is operating profit? Operating profit is your EBIT. Okay, so if my EBIT is X, then my preference dividend is 15%, so 0.15x. Okay, so this is given right now. Now in the question, preference dividend is based on what? Operating profit, correct? So I will, from here I will minus what, you know, I will minus preference dividend upon 1 minus t. Preference dividend minus 1 minus t. Now some people will ask, sir, till this point of we used to never do this, then why? So actually na, this FL formula na, this financial leverage, this formula is based on EPS. This is based on what? EPS. And this interest, what we are deducting, is actually tax deductible. Correct na? Interest is tax deductible. It is tax deductible. It is eligible for tax deduction, right? Plus it is pre-tax or post-tax? It is pre-tax. Preference dividend is not tax deductible. Is not tax deductible. Understand? This is not tax deductible. This is tax deductible. This is not tax deductible. Correct? I'll write this. Interest is tax deductible. Okay, you get tax benefit on this. Not tax deductible. Correct? This is pre-tax. And preference dividend na, preference dividend, okay, what you have written, okay, preference dividend is post-tax. Preference dividend is what? It is after tax. Now you pay after tax, correct? After tax you pay. So interest already before tax is there. Preference dividend is after tax. So they are not at same level. So to make it at same level, what we do is we take this now, we divide this by 1 minus t. 1 minus t. Why? To make it pre-tax. To make it pre-tax. Ratios, whenever you are doing, if you remember, when we started with the cost of capital, the first question where we did ROC, RORO ESHF, rate of return on shareholders fund, all this, I gave you the logic. In RORO C, the numerator is EBIT. The base should be capital employed. Here also, same thing. What is happening is this EBIT minus interest. The interest is tax deductible. This PD is not. This is pre-tax. Okay. And this PD what you have calculated now is C. This is pre-tax. Correct now? It is what? Means generally it is what? Not tax deductible. So it is after tax only we pay. Right? So this part and this part is not at the same level. Okay, to make it comparable, to make it at par, what we do, this is pre-tax now. Let us make this also what? Pre-tax. Understood? So you take this, means PD, and divide it by what? 1 minus t. Understood? So that is the basic reason. Okay. Interest you can directly take. Understood? But whenever you have such type of question, you'll have to remember that PD is given And PD is based on what? Preference dividend is based on 15% of operating profit. Correct? It's right, 15% of X, 0.5X. But generally it is after tax. So to make it pre-tax, because this is pre-tax, everything should be at par. One is at pre-tax, one is at post-tax. No, not allowed. So to make it pre-tax, I divided by 1 minus T. Is that clear? Understood? Now there can be one more question. Till this point, sir, we used to never deduct preference dividend. So in the exam, if preference dividend is given, then we have to deduct. Is that so? That is correct. Means if preference dividend is given, then you have to deduct. But sir, why we are deducting? So I'll give you a reason for that. Leverage means what? Risk. Leverage means what? Risk. And who takes this risk? Not preference shareholder. The leverage, the risk is taken by equity shareholders. So all the formulas what we did now, EBIT upon EBIT minus interest, whenever we were taking EBT in the denominator, we were assuming that preference is not there. But if the preference is there, then this is the formula, because we are not calculating the leverage for all the shareholders, but the leverage is taken by whom? Equity shareholders, and therefore the preference dividend should be deducted, and it should be earnings. It should be what? Earnings. Earnings for whom? Shareholder in the denominator. I hope it is clear. Means a student might say, whenever the preference dividend comes, जब preference dividend आएगा, okay, we will take, हम तो लेंगे. That is correct. But reason क्या है? What is the reason? Because the leverage is taken by equity shareholders, therefore the preference is deducted. Means whenever we used to take EBIT upon EBT, it was assumed that preference is not there. I hope it is clear. And one more thing, interest is tax deductible, it is pre-tax, preference dividend is post-tax. So to make it at par, I will divide it by 1 minus T to make it pre-tax. Understood? And hence the formula. Okay, so let's apply this. Chalo, DFL. How much is DFL? Okay, I'll show you the board. Wait. Question so that it becomes easy for you, because many people might not be having. Okay, now you can see the board. Okay, so let's start. So if I see my DFL is, wow, how much? DFL is 4. Okay, so I will write the formula. Four is equals to EBIT is X upon, okay, interest I have calculated, interest is given in the statement. Yes, interest is 57,400. So X minus 57,400. This is my EBT minus preference dividend, 0.15x divided by 1 minus 0.3. Or to be frank, writing I realized that X should come in the center. X is very important, man. I'll not do any major calculation. What I'll do is I'll simplify this. 0.15 divided by 0.7 directly. Preference dividend 0.15 divided by 0.7. So it comes to 0. Round it off. No problem. 4 is equals to X upon X minus 57,400 minus, directly I will write 0.2143x. So it becomes easy. Understood? I'll minus this. 4 is equals to X upon 1 minus 0.2143, 0.7857x minus 57,400. So I'll take this here. So it will get cross multiplied. 0.7857 into 4 becomes 3.1428x minus 57,400 into 4 becomes how much? 2,29,600 is equals to X. 2.1428x, I deducted this here, is equals to 2,29,600. What is my X? 2.142h. Wow, I'm getting 1,07,000. I'll take 150 approx. I rounded it off. 149 I was getting, 149.5. I took it how much? To round it off. Maja aa raha hai. Understood? I'm enjoying it. Okay, so I'll take 1,07,150. So this is my what? This is my, now if you go and check, this much it is allowed, means this much na, it is allowed. Which one? This all things na, this rounding off and all is allowed. Because in the solution what I can see is they are getting 1,06,296. 6,296, 1,000 ka difference. Why is it so? Is there any mistake? Yes. This is correct. There is a rounding off mistake, huh? That's it. But you can write approx. Okay. Everything will change. Everything is correct. Now what is happening in the recent time? They are solving the questions on Excel. That is what I have observed in the suggested and all. Understood? They solve it on what? Excel. Advanced, no? Everything. So they are solving it on Excel. So Excel, what it does, it takes all the digits which you can't take. Okay, that's the problem. So we will not be able to match them. But take this is approx answer. EBIT I have got. Okay. So I got EBIT. Fine. Let's go ahead. Okay, next. Now what is given? Once I get EBIT, I know the interest. Okay. What else is there? Interest I know, EBIT, interest, EBT I will get. Tax rate, do I know tax rate? Let us do one thing. Always what you should do in the first, whenever you get a format type question, na, first you should write whatever the format is given. Sales minus variable cost, contribution minus fixed cost, EBIT minus interest, EBT minus tax, PAT minus preference dividend, that was there. Okay, figures will be different a little bit. Earning available to equity shareholders. Okay, this is what. So I know EBIT. How much is EBIT? 1,07,150. 1,07,150. 57,400 was my interest. So 1,07,150 minus 57,400. How much? 49,750. Okay. Tax rate is 30%. Na? Tax is 30%. Tax is 30%. So calculate 30%. 14,925. Correct? It is 34,825. Preference dividend I know, that is 1,07,150. EBIT का 15%, 0.15, correct? 15% of EBIT. 1,07,150 into 15% comes to 16,073. I am rounding it off, 0.5 it is. Okay. So 34,825 minus 16,073 comes to 18,752 is my Hitesh. Okay, fixed cost, contribution, sales, this much is only remaining. See, everything other we have done. Okay, now what is the twist? Listen carefully. In the question, they have given us cash break-even sales. What they have given? Cash break-even sales. So, cash break-even sales is nothing but cash fixed cost, okay, divided by PV ratio. Divided by what? PV ratio. If you check here, PV ratio is given. So what you get is cash fixed cost. What you get? Cash fixed cost. Now, those who have not understood, for them, break-even sales formula is, those who have not done costing, break-even sales is total fixed cost divided by PV ratio. See, when I calculate the PV ratio, how I calculate? See the logic. Sales minus variable cost is contribution. Sales minus variable cost is contribution. Understood? Fine. Sales minus contribution is sales minus variable cost is contribution. Minus fixed cost is what? Your profit or loss. whenever I will be able to cover this two cost, whenever I will be able to cover this two cost, I'll be at break even. I covered my variable cost, I covered my fixed cost. See, interesting point. I covered my variable cost, I covered my fixed cost. Focus, come on. Variable cost and fixed cost, if I cover, what I will have? I'll have no profit, no loss. Understood? I'm at profit. So when I calculated the PV ratio, contribution upon sales means variable cost is already done. What is left is what? Contribution. Means variable cost is covered in PV ratio. Variable cost is covered. PV ratio is what? Over and above variable cost. What is left? Contribution is what? After deducting variable cost, what I get is contribution. Why it is called contribution? It is the contribution towards fixed cost. Now I have to cover the fixed cost. So if I want to cover the fixed cost divided by PV ratio. So I'm trying to cover that fixed cost. If I want to cover that fixed cost, okay, what should be my sales? What should be my sales? So that sales will be break-even sales. That sales will be break-even sales. So logic of the formula. In PV ratio, I have already covered variable cost. Whenever I have to cover variable cost plus whenever I have to break even, I should cover variable cost and fixed cost. I have to cover variable cost and fixed cost. In PV ratio, I have already covered what? Variable cost. PV ratio is what? Contribution. Correct? PV ratio is what? Contribution upon sales. Well, how I calculate contribution? Sales minus variable cost. Means when I calculated contribution, already variable cost is covered. Now what I have to cover? Fixed cost. Now what I have to cover? Fixed cost. So therefore fixed cost divided by PV ratio, because this was cash, so I will get only cash fixed cost. This was twist. So cash fixed cost is how much? 2 lakh. No, cash fixed cost I don't know, but break-even sales I know. Cash fixed cost is equal to, directly I am writing, break-even sales is 2,25,000 multiplied by 40%. 2,25,000 into 40 is 90,000. So cash fixed cost is 90,000. If you check, depreciation is part of manufacturing. How much? 10,000. So total fixed cost is equals to 90,000 plus what? 10,000. In bracket, you should write this is nothing but depreciation. So total fixed cost is 1 lakh. Done. Then you can show like EBIT plus fixed cost is what? Contribution. Contribution is equals to EBIT plus fixed cost. I am going like this. See, EBIT plus fixed cost. Here 1 lakh. So my contribution is how much? Just to show presentation. 2,07,150. So I will write here. This is 1,07,150 plus 1 lakh is nothing but 2,07,150. Completed. Understood? PV ratio was given. Contribution is there. You can easily calculate what? Sales. So sales is equals to, directly I am writing contribution upon PV ratio. Contribution upon PV ratio. 2,07,150 divided by PV ratio is 40%. So calculate 2,07,150 divided by 40%. Answer is 5,17,875. 5,18,017. 2,000 difference is there between their answer and our answer. 5,17,875. How I'll get variable cost? Minus 2,07,150. Correct now? 150. Contribution was 150, na? Yes, 150. My handwriting is not clear. Seems to be 180, 150. So variable cost is 3,10,725. Income statement done. Understood? Income statement done. What is the next questions they have asked? They have given, see, equity share capital, reserves and surplus. This will be helpful later. Okay. So see, sales we don't have this. Okay. Reference Hitesh we calculated. Income statement is done. Operating leverage. Contribution upon DOL is equals to, you should write, this is your first part. This is your first part. Correct? Now answer for the first part. This is your second part. Okay. DOL is equals to contribution upon EBIT. Contribution upon EBIT. Contribution was how much? 2,07,150. EBIT was how much? 1,07,150. How much is my DOL? 2,07,150 divided by 1,07,150. Correct? So it is 1.93 times. 933. They are getting 94. That's fine. Third. No, not third. What? Combined leverage. I'll calculate DFL. DFL is EBIT upon EBT. So EBIT is 1,07,150. My EBT was how much? 49,750. 49,750. Divide 1,07,150 divided by 49,750. So answer comes 2.15 times. Yes, they are getting 1.9. 1 minute, I made some mistake. No, in the solution they have made some mistake. I have no problem. DCL is equals to, no, is there a mistake, man? 1.93 is correct. EBIT is 1,07,000. EBIT upon EBT, na formula. In solution also they make a mistake, man. 1.93 into 2.15. 1.93 into 2.15. 4.14 times. In solution it is wrong, okay? Whatever, 145 times, 15 times. In solution mock test paper this question is there. The solution is wrong, okay? Be careful. Fine, DCL is done. Third, after DCL, what they have asked, percentage change in EPS if the sales increase or decrease by 7%. Okay. I know combined leverage. Combined leverage is equals to percentage change in EPS upon percentage change in sales. Correct, directly. So this is 7 point, combined leverage is 1 minute. Financial leverage was given. Correct. Financial leverage was given, na? It was 4, I think. Yes. Correct. DFL no need to calculate, and it is reference is there, na? So this is wrong. This is wrong. Correct, na? DFL is 4. No, their solution is right. होता है बड़े बड़े देशों में छोटी छोटी बातें होती रहती है 4 times. So this comes to around 1.93 into 4. DFL is given, and it is after preference, na? Therefore, okay, it is after preference, so we'll have to take that only. This is correct. Wow, what is the 1.93 into 4? 1.93 into 4 is how much? 7.72 times. 7.72 times. 7.72 times. So combined leverage is 7.72 times. They are getting 7.6 times. That is fine. Directly I'll write what I want. Combined leverage, this EPS changes by how much? Percentage change in EPS is equals to 7.72 multiplied by earning, this sales increase or decrease by 7. So into 7 is equals to 7.72 into 7 comes to how much? 54.04%. Okay, this is the change in EPS. Right? Sorry. God bless me. Fourth question. I'm loving it. Ruro ESHF. What you will take? Hitesh. This was simple. Divided by shareholders fund. Okay. Hitesh is how much? What we have got? 18,752. 18,752 divided by shareholders fund. Shareholders fund total is how much? Here in the question. Equity share capital was how much? 1 lakh plus 35. Directly I am writing 1,35,637. Is this correct? Is this correct, man? Am I right? No. Why no? Why this is not correct? 1,35,000. This is wrong. 1,35,637. Why this is wrong? Because I should take what? Means I'll write clearly. I should take the Hitesh also. 1 lakh earnings. This earnings belongs to whom? This will go to reserves, na? Ultimately. This all is the twist. See, reserves and surplus is 35,637 plus 18,752. So 18,752 divided by 1,53,920 into 100. Here remember this Hitesh should come. This is what? Hitesh ultimately will go to reserves. Okay. So this is current year's earnings. Okay. Calculate the percentage. 18,752 divided by 1,53,920 into 100. 12.18%. Okay. Fine. So they are getting 11.88. That is fine. Next, what is the question? Amount of debt if post-tax interest is 6.65%. Pre-tax interest is equals to interest post-tax. Okay, I want to make it pre-tax. So divided by what? 1 minus t. Simple. Correct. So post-tax is 6.65%. Okay, on 1 lakh, na, debt was how much? 1 lakh, I think. Debt Debt was given. Debt. No man, that was not given, man. Okay. Any which ways, they have given us the percentage. Now we can directly calculate percentage also. 6.65 divided by 1 minus 0.3. So 6 percentage. Now we have to calculate percentage. Debt is not required. Debt amount we can calculate. Now debt too we have to calculate. Debt amount they are asking. So debt was not given. Correct. How we can calculate? 9.5%. So debt would be, if my interest upon what? Interest rate. Interest upon interest rate. Interest is how much? 1 minute. I hope this is clear. They have given us post tax, but interest should be what? Pre-tax. So I calculated pre-tax interest. How I calculate pre-tax? Divided by 1 minus t. Preference dividend divided by 1 minus t is what? Pre-tax preference dividend. Same way I calculated. This was post-tax given 6.65. So pre-tax I calculate how much? 9.5. Debt is how much? 57,400 into 9. Sorry, not divide. Divided by, not multiply. 9.95 or 95. 9.5. 9.5%. Answer 6 lakhs 4,210 something. Understood? Done. Okay. Completed. 5. Okay. Pause and copy this. I think 8, 9, 10th are manageable, but still, see, variable cost is 60. So contribution is 40%. Correct? Contribution PV ratio is 40%. Operating leverage is given, combined leverage is given. Okay. So if you know PV ratio, understood. If you know PV ratio, what we can do? Operating leverage is there. EBIT is given. So I can easily calculate what? Contribution. Right now, they are asking us what? Interest amount. So EBIT is there. How we will do? This is simple actually. If I know contribution is not required. I know this, so I can calculate what? I can calculate DFL. So on Calc itself, 15 divided by 5. 15 divided by 5. I'll get 3. 3 is DFL. 5 multiplied by 3. DOL multiplied by DFL is combined leverage. So 15 divided by 5. DFL is 3. EBT is how much? 30,000 divided by 3. 30,000 divided by 3. EBT is 10. EBIT is 30. EBIT 30. EBT is 10. So interest is how much? 20,000. Interest is 20,000. Let us check the solution. Interest is 20,000. Let's check. The interest is 20,000. Simple. I know combined leverage. I know operating leverage into financial leverage is combined leverage. Financial leverage is 3. EBIT upon EBIT minus interest. Correct? No need to do all these things. Correct? Now directly I can say na EBT is, no need to solve na. EBIT upon EBT. So EBT is how much? 30,000 divided by 3, 10,000. So if 30,000 is EBIT, 10,000 is EBIT, 20,000 is what? Interest. No need to solve this equation and all. Okay. Let's see the next one. I'm not solving this because it's very simple. See, this is also easy. DOL is 2, DFL is 3. If the sales increase by 5%, during the next quarter, EPS will increase by, I think majority of people have done this. Those who have attended the class, they can easily do this. Let's see the solution. See, DCL is 6. Percentage change in EPS is equals to DCL multiplied by percentage change in sales directly 30%. Okay. Next, let's see if this is required to be solved. A mid-sized company manufacturing consumer goods. Last quarter, the company reported sales of 2 lakhs. Okay, the production process involves significant variable cost, which account for 50% of the sales value. Additionally, the company incurs 40,000 as fixed cost for rent, utilities, and management expense. Okay. The industries have also borrowed, leading to 10,000 as annual interest. Currently planning to launch a new marketing campaign aimed to boost the sales by 10% as the company list. See, sales is given, 50% is variable cost, means contribution is 50%. 2 lakh into 50%, 1 lakh. Out of that, I'll minus 40. So I'll get your EBIT. Okay. Interest is given, so I can get EBT. Easily I can calculate combined leverage. Contribution upon EBT. See, sales is 2 lakhs, contribution 1 lakh, fixed cost is 40, EBIT is 60, minus 10, 50. So combined leverage is contribution upon EBT. 1 lakh divided by 50 is 2. Correct? Now next is what? If the sales increase by 10%, okay, impact of the 10% sales on using combined leverage, means how much the profit will change. So orally we can do now that PBT will increase by 20%, 10 into 2, because combined leverage is 2. DCL into percentage change in sales is what? Change in profit, that is 20%. No need to show all these things. Understood? You can directly write the formulas. Like this is same like previous sum. This what we did now. Same thing. Percentage change in EPS. That's it. That is what they are asking. Percentage change in EPS is equals to percentage change in EBT is equal to percentage change in PAT. Everything remains what? Same. Okay. Provided there is no preference dividend. Okay. Fine. I think this is also manageable. Okay. This was easy. I think everyone has done. Okay. We'll stop here.